Not a household name. The ticker is SNPS. The stock is Synopsys. And look at this gap down that it had this week. Absolute train wreck. We're going to show you why that happened and why what price you pay when you do M&A is incredibly important. What happened to SNPS? Well, back earlier in the year, they did a massive acquisition of a company called ANSS, ticker ANSS. And take a look at what they did to the balance sheet to do that. This no debt, very typical semiconductor company, went $15 billion into debt in order to buy ANSS at 38 times EBITDA. That's an incredibly high multiple. So initially there was no real reaction when SNPS said they're going to buy ANSS, but they paid 38 times EBITDA, and take a look at what they did to the balance sheet here. Perfect no debt balance sheet becomes 15 billion in debt, 13 net. Compare that to just 2 billion in pre-EBITDA. This stock is almost 7x levered. 4x is a really high number. So a lot of leverage, a lot of debt that needs to get paid down in this deal. If you've been watching our videos and want to invest alongside us,
click the link in the comments. Select your brokerage.
Search for ticker RVER wherever you buy stocks.
Thank you, and now back to our video.
So the good news on paying that debt down, they did buy positive EBITDA from ANSYS, about $1 billion worth. So $2 billion in EBITDA becomes $3 billion in EBITDA, helps to pay down this debt, right? However, the EPS number, where 1 plus 1, these two companies should equal 3 because they are better together, didn't pan out. This EPS number, they were expecting about $15 a share, now guided down to $12.83, much worse than people were expecting. That is why the stock gapped down and why it is extremely important that you pay the right price when you merge two companies and perhaps not 38 times EBITDA like they did. So the price you pay when you merge two huge companies really matters. 1 plus 1 has to equal 3. It did not here. They overpaid for this, and when it came to fruition, you can see what happened to shareholders. Always make sure you check valuation when one of your companies merges with another. Thanks for everything, guys. Likes, subscribes. We really appreciate those. If there's anything you guys want to see, let us know in the comments.